You're now tuned in to the Desire to Trade podcast, a show where we bring you the best figures of the trading world and teach you how you can become a successful trader. This is your host, Etienne Crete.
Etienne Crete here, first student founder of Desire to Trade. Welcome to episode 98 of the Desire to Trade podcast. So in the past couple of weeks, I've been moving a lot, being from Indonesia all the way to Thailand now, and it's quite a different atmosphere. I've had the chance to have access to really good internet these days, which is amazing. And that means I can do even more interviews with traders. I have some great things coming up, but before we jump into the interview today, you guys probably remember that I've been changing a little bit the way I trade while I travel. I now look only at the daily chart, which means that I was surprised by how few setup I took this past month. In fact, I didn't even close in trade the last month. I used to take a couple of trades per week, closing a couple of trades every single week. But now, trading only the daily chart is something I have to adapt to, I think. I did a full video about this if you guys want to see the trading results I've had this past month. In comparison to December 2016, you'll be able to know exactly what happened. Simply go on desiretotrade.com/result. And that should lead you to the most recent video I did about my results. It might not be the one that I'm talking about now, could be a more recent one, if you're listening to this later on. But you'll be able to see my most recent trading review video. Now let's jump in the interview today. It's pretty amazing. Today is an interview I was really excited to publish with Michael Melissinos. Michael is a trader who's involved in longer term trading, but who's been able to create a big hedge fund at a very young age. Starting at 26, he's been able to get close to $300,000 to start trading for other people. And now, he's managing money for over 30 people. Michael came on a podcast to share exactly what he's doing, all the things he does on a daily basis, and exactly how he presents his offer to investors to be able to trade for them, which is really game-changing. Some advice that I never heard before, and I was really, really happy about this, for sure. It's great if you want to be able to trade for other people, or if you just want to be able to present your trading to other people for whatever reason. You'll know exactly how to do it. So I'll leave you guys with this interview. It's really game-changing. I hope you guys are going to like it. And I'll come back at the end for the takeaways. But help me welcome Michael Melissinos. Michael Melissinos, welcome on the podcast. How's it going today?
Hey man, I'm good. Thank you for having me.
Good, super happy. The first question we ask the guests on the podcast usually is, what's one quote that inspires you?
What inspires me? I think just seeing other people do their thing. I'm not much for like the quotes and the, inspirational speeches and that rah-rah stuff that seems to be very popular with other human beings. I feel like a lot of people need a boost. They need some permission to kind of start up. They need the confidence from someone else to tell them that they can do it. Maybe I'm very fortunate. I had good parents and they told me I could do anything I wanted. So I just like watching other pros do their thing and I get to learn, from them. I'm an only child, so maybe not playing with a sibling, maybe being more observant in my youth. I don't know. Help me with that. So I don't know. I just like that. I like seeing other people do well. And that way I can, learn from them and emulate them and steal from them and all that stuff.
That's pretty cool. I like that. It's kind of different. So tell us what's going on these days for you a little bit.
What's going on these days? Well, my fund that I manage money for about, 30, 35 investors now. I've been doing that since 2011. Day-to-day trading is pretty easy stuff. It's all systematized and got it down to a science and mechanical type thing. So that doesn't take up much time. What takes up most of my time is the marketing stuff, trying to communicate to my investors, other prospects. Basically just what I do. Try to be an open book, try to give people an insight into how I trade, how I think about trading, and my, other general philosophy of life, and, kind of make the communication process, in regards to trading and stuff like that, as, I won't say entertaining, but as pleasing as possible, so it's not so boring. I know sometimes, like spectacular traders, guys that we, grew up learning about, reading about, just aren't the best communicators. And I don't think they really get the message across. I think at the end of their talk or this or that, people still don't know what the hell they're talking about. So they feel lost. They don't feel like they could actually do this because it's some smart guy. He's saying words and things I don't even understand. And, so I try to like bridge the gap between the high level stuff and like the average guy. I very much like to work with guys like me, not necessarily shy away from, institutional type investors and stuff like that, but I tend to probably connect better with like the average guy, the average, business owner, guy who's like, 25 to 45 type of thing. So I spend a lot of time doing all communication in regards to that. I have a podcast myself that I just started. It's not interviews or anything. It's basically like recreating my blog posts in audio rant form, in under 20 minutes. Try to get more people more avenues to hear me or consume what I have to say, not necessarily having to read all the time. So, yeah.
Cool. So we'll definitely have a lot to talk about, and probably the biggest topic is going to be trading for other people, because it's something you've been doing for a long time. But I want to go back in time a little bit and tell us how you started to trade exactly. How did you hear about trading in the first place?
I was in public accounting right out of school in 2007. And, auditing for hedge funds. I was, kind of doing that job because my dad and my uncle advised me to do that. But I knew that wasn't where my heart was, but I, begrudgingly took their advice and started doing it. So during that span, my time there, and I was only there 10 months, I was, in the downtime, I would read all about, the markets and stuff like that. And then came across trend following, and it was like, this sounds a little too easy. What's the catch here? Like I say, first it resonated with me because of the life philosophy that it bases its trading on. I feel like trend following is not necessarily a trading philosophy. It's more of a life philosophy that can be applied to trading. Its core principles are natural. It's like, if you applied it into nature, I'm sure it would work pretty well. So that resonated with me, but it was being spun as like, oh, this is really easy. So I was like, oh, okay, hold on. This can't be easy, because I know nothing is easy. So I delved into that, got some books, read some more, internet articles and stuff like that. And then started to, understand that this is maybe something I could do. I'm not sure yet, because I felt like again, like the guys who were doing it were PhD, MIT level type people. And I was like, what am I going to do? I was a baseball player my entire life. I'm probably not as smart or not smart enough for this. So it took me time to kind of like, get the confidence to understand it and then believe that I could do it. So, but during, my learning about it in my public accounting job, I left and had the brilliant idea to go to Bear Stearns. That I went there, 6 months before it went down. So that was genius on my part. So I, after Bear went down, and then I was on at JP Morgan during the crisis when Lehman went down, I knew that wasn't going to be the career for me, because I saw behind the curtain, before I went there, I thought these guys were so smart and all this and that. I was going to be a trader, at least on the sell side. And then I thought, all right, no, it's not going to be for me. Let's go back to this trend following thing, and let's see if I can actually start a fund myself.
Mm-hmm. Just out of curiosity, what made you realize that this was not like the right job for you trading in an institution?
Pretty much seeing, when I went to Bear Stearns, I was 23, and that, I was pretty young and stupid, or, right out of college. And I thought, the people there, much like on Wall Street in general, they're smart people too, Ivy Leaguers and all this stuff. And it's like, these guys are bright. And then you get into place, and then you see, the shit hit the fan. You're like, these guys don't know what they're doing. No one knows what they're doing. And I saw a lot of people who I worked with, or, friends with, respected and all that. They lost tons of money just by doing the non-trend following stuff, disobeying basic core principles of investing, of life in general, namely not cutting your loss, not respecting the trend. And that to me was like just an eye opener that, oh, maybe I don't need to be that bright. Maybe I just need my good old fashioned common sense and I can win with that. And that turned out to be, I think, the truth. And that pretty much gave me more confidence to get on my, path of starting a fund, and that I can actually do it and do it well, as long as I stuck to the core common sense principles of it. And yeah, so I started, a couple of years after the crisis, and, I spent that time, research and trying to build an actual system. And, I did everything in Excel. I did everything by hand because I really wanted to get under the hood and see how everything moved and worked. And, so I started that way. And here we are 6.5 years later.
Mm-hmm. That's pretty cool because you treated this as a business, not just a hobby where you try to make money, right?
Yeah, I mean, and for the record, I didn't trade one single futures contract before I launched my fund. So I don't know if some of your listeners, some of the other guys out there, like the young guys, think they need to live trade for a bit, whatever.
A lot of people think that for sure. Yeah.
I mean, I don't think you need to. Maybe you need to, but people don't need to. It's not a requirement. Like, I didn't need to. All I needed was the back test, the research, and all that. And really, like in live trading, it was nothing really different other than, all right, there's real money going up and down now. And maybe for each individual person, they need that confidence of live trading before they, take on other people's money or something. Okay, that's fine. But don't think that you need to. Like, don't think that, someone told you that you need to. No, you don't need to. I didn't. And it was fine. I would just say, make sure you know exactly what you're doing before you start, obviously.
And that's a powerful thing, is that most people who think they need to trade a long time before they kind of feel confident enough to trade, that's because they're not prepared enough. But you had all the things prepared. I guess you've done your research, you've done your backtesting, you had the stats, and you kind of knew what to expect. So it's very different.
I mean, at one risk of not just starting. And I'm saying, look, you got to know what you're doing first. Like, I was doing this, paper trading, if you will, going through the motions to, several months, actually probably for like a half a year in the back half of 2010, just to okay, when I start for real, I'm already in the habits. I'm already in the I'm already, doing the thing that I'm going to be doing with the live money. But okay, let's just get the mechanics down. So, but I did that. And I missed a massive, massive run. And, for a trend, and, a lot of trend following traders did really well during that back half of 2010 when we had QE2 launch and commodities went nuts. And, guys had really great years. Some guys had better years in 2010 than they did in 2008, which 2008 for trend followers is always being sold as like the best year ever, whatever. So that's one risk of not just starting, or starting at a point where you're just waiting, and like, oh, I need more confidence. And then, boom, you miss great moves that go by. And then what happens, I launched in 2011, did okay in the first year, but, since that time, it's not been a great environment for trend following. And I always think, when I look at, my composite, monthly track record and everything, I'm like, oh man, imagine if I had those 2010 numbers in there, how much better it would look. Like that's a lesson that I always carry. Like, if you're ready, do not wait. Go.
Yeah.
Go. Because you don't know what you might miss. And I'm telling you, sometimes the markets don't really give you what you want in the timing that you want it. It's like, oh, okay, well, that was a good year. 2012 will be a bad year, and 2013 will be great, and then it's not great, and you're stressed now. So I feel like when you're ready to play, go ahead, go.
Go. But you have to be ready.
Yeah. You got to be ready first. I don't know what it takes for every individual person to be ready, and but I feel like you're probably ready sooner than you think. You can always like double check your work one last time. You can always, read another book just to get more information. You can always, reach out to another pro trader and ask him questions. It's like, dude, you know what you're doing, just go. You don't need extra. This is all, wasting time. It's all, medication, and you're just delaying. You're ready, just go.
I like that. So I'm curious to know, how was it to get your first kind of investment in your firm to trade? Did you get the money easily, or did you have to go far to get the money? How did that work?
Well, I started my own money, my dad's, and my two uncles. And that was, I don't say easy, but, easy to get. But I
Fairly
definitely
easy,
had
yeah.
I definitely had to educate a little bit. Okay, what is it you're doing here? Because my uncles, my one uncle, wealthy guy, but he was in an accounting field, and my other uncle, very, wealthy as well, but he's Wall Street guy. So he had a lot of questions. It's like, look, you're 26 and you think you're going to start a fund and you have no experience trading? What the hell are you talking about? Type of thing. And so I had to actually, explain a bit, which helps my communication to other non-family member investors that I got, since that time. But no, I mean, I was in one of the trading tribes, the Etsikota trading tribes in New York City, and I got, became good friends and got some, guys from that to invest in me, and other friends, other colleagues, friends' dads and stuff like that. I got a fund of funds investor that came and went, in a short period of time. Just things like that, on podcasts like what I'm doing here. People hear me. And I have an investor from India, I have an investor from Australia, another guy from Europe. Never met these people, but, they reach out to me and, we connect. And, that's pretty much how I do it, doing all the other marketing stuff too, like the blogs and stuff. And people see it, read it, and they think, oh, okay, I like this guy. Let's do something. And I say, okay.
So it's kind of a different perspective, because a lot of people who do what you're doing are basically going to jump in education, trying to kind of teach people how to trade. But you have this different approach that you're going to like trade people's money, which is very different. And I think one of the big thing in your case is going to be transparency, because like you have to show people what you're able to do and like what stats you have. Do you like display your stats publicly, or?
I have them on my website. You have to, click, a disclaimer to see it. But yeah, everyone could see it. And I also have, a lot of, funds submit their performance to the third party performance sites where, investors can go and see your performance, your stats, and all that stuff. So I do that. And yeah, that's pretty much where people can go and find, my stats. And if anyone's on my email distribution list, I send out the performance report every month, and they see that there too. So yeah.
That's cool. And what would be your main advice for people who are, let's say, starting out to trade, they've been making some money consistently, and then they kind of have these few people that they want to trade for? What would they have to do? Do you have to present stats? Do you have to go see those people, maybe educate them a little bit? How would that work?
Yeah, I mean, I like to think of it, the way I approach it is, if I was an investor, what would I like to see? And I think that's a good way of approaching it. I don't think you really need to like overcomplicate things. Like, what would you want to see? I would want to see monthly numbers. I want to see some basic, drawdown, compounding return, maybe time window performance, enrolling 12 months, 24 months, 36, and if you're not trading that long, just break it down. If you're only trading a year, go, 3, 6, and 12 months. If you're trading 2 years, 6, 9, 12, 18, 24 months. It's just to adjust it to how long you've been trading. So just give people an idea of, how well you perform in different holding periods, stuff like that. And then, maybe create a pitch book, or like I want to say like a coloring book, but like an ABCs of how you do it. Like, what's your entire process? Like, how do you come up with the markets or the stocks that you trade? How do you know when to get in and out of them? How do you decide how much to risk towards them? How do you, all these things. How do you do these things? And then show people, because, people love to see that stuff. They get very, very comfortable when they ask you a question. How do you select the markets that you're like, oh, you're in Apple? Like, how did you come to that? How'd you find that one? And then boom, you have your answer and you show them. So I think that stuff, there's a lot of people, a lot of fund managers out there that don't want to show that stuff because they're afraid everyone's going to steal it.
Mm-hmm.
People, I'll tell you, you don't have to worry about anyone stealing anything, because there's really nothing new in the markets. It's like the oldest industry there is. It's just people arguing over a price. That's been around forever. There's really no new strategy, so you don't have to worry about all these people stealing it and someone's going to take your proprietary thing. If that was the case, man, I saw stats the other day. We spent like, I don't know, $1 trillion on diet and exercise, and since the 80s or 70s or something. We're the fattest we've ever been, at least in America history. So it's not like people are going to know what to do and then do it. People know how to get thin. They just don't do it. People know kind of how to invest well and manage money well. Just don't do it. They don't do it. Most people are not playing for that. They just want to play to taste, good food, and they want to play. They want to have fun. They don't want to win. They don't want to be lean and, strong and all that stuff. So, I feel like get very transparent with your pitch book. Show people the ABCs of how you do it, your whole process. That works for me. And try to do it in different forms, have your keynote, like your PowerPoint type of thing. And then you can also write a couple, blog posts on it, like a couple quick things that explain it, where it's more word, there's more copy. So people can go and take it and read it and understand it themselves. Meanwhile, you have like your PowerPoint where you may want to be there and talk them through it, where it's more illustrative with pictures and stuff. So you just have your process, have your questions that you would ask another trader, investor, in many different forms. You can even record yourself too. Record, the How I Trade, series. 5-10 minutes each, significant topic of or question that someone would ask you, and boom, done. All different forms.
I think that's pretty powerful, and it's something that I didn't see much. I think outside, well, in the trading area, I think people doing that. It's quite interesting. That I'm pretty sure it makes a big impact on people that you trade for sure.
Well, I mean, it's never going to end where someone has a new technique. Someone has an AI thing. Someone has a machine learning thing that no one else knows what they're talking about. And then, it sounds great. And you get these great salespeople that are using these murky, unknown type of topics, these high level, very, very intelligent, topics that they're going to get money from, have no idea what they're talking about. But they're very impressed by the language. They're very impressed by the sale of, the guy or the girl who's, selling it. He's making it sound like, oh, this is a new great thing. It's like, the Bernie Madoff effect. There's still going to be frauds after Madoff. And there have been, because there's great salespeople that trick people into them thinking that they know what they're talking about, that this is legit. It's not legit. It just sounds good. So that's never going to end. But I feel that the people that at least I like to work with are, people in the New Jersey, New York area that, I don't want to say they could be naive as anyone, but we tend to have a little bit more of a skeptic view, a little more mistrust, not so quick to trust, maybe as other parts of the world. I don't know. But I like to work with people who question me, who are not afraid to ask a question, who are not just blindly listening to me and, all that. Because I don't consider myself like a great salesperson. Like I don't get people excited about things. I don't think that's my job. My job is just relay the facts to you. And my job is to relay the facts ever more clearer and succinct to people that help them make a decision. So That's just my approach. There's a lot of different approaches. If you're a rah guy and you like to get people pumped up about your trading approach and whatever, and get people excited and raise a lot of money, and fine. But just so you know, like the people are probably, invested on that being always the case, where you're always going to need to pump them up for them to continue to invest with you. And I'm not doing that. I want people to invest with me based on, merit, my performance, their trust in me, not necessarily that Mike's got this thing, he's got this new machine learning thing. He's, this is going to be great. And all this. No. No. I'm selling people on the truth and the realities of how trading actually works. And people can, buy into that, and they want to go with me doing it, quote unquote, the right way. That's great, because likely they'll be here with me for a long time. And that's what I like. I don't like the quick in and out, get people jacked up and, raise a ton of money, and then they leave, and then I got to do it again, then I got to do it again, forever. I don't like that.
Mm-hmm. And in terms of trading for other people, how do you get paid exactly? Because I've seen different ways of doing that. But do you have like a preferred way of getting paid, like a special ratio?
Yeah, I mean, it's standard, standard management and or performance fees. I kind of, negotiate with some of the people that come in. I generally see that younger people like a no management fee, and they're willing to pay a higher performance fee. I don't know. Maybe younger people today just, don't like the idea of management fees or whatever. But I noticed that they're willing to pay more on the upside. They're okay with that. It's like, oh, okay, well, if you make me money, fine, I'll pay you a little bit more, but I don't want to pay you if you're losing, if we're not making much or something like that.
Mm-hmm.
So I understand that. That's fine. Being a trader, I know our business, our product is money. I'm not really in it for like to maximize my money. Well, I think a lot of people are. I'm maximizing like survival, to never go out of business. It's not to minimize losses. It's not to maximize gains. It's really just to like never die. Like, yeah, it is to profit, right? But it's like, I don't have some curve-fit strategy with my trading. I don't have some curve-fit strategy with my business model to make money off of people. It's hey, let's go for it long term. Let's be in this relationship a long time. What do you think, a fair model is, a fee structure that you're comfortable with, that makes sense for all of us, and that you could see abiding by, for 20 to 50 years, like this is good. This is not some like venture fund where we're going to try to make a ton of money and this is only a tight window of time, where it's like a special situation and I'm trying to make as much money from everyone because this is going to be a short-term play. No, this is a long-term, relationship, as close to marriage as you can get, type of thing. So it's got to be fair. But yeah, I mean, what I use is the simple, management performance fees, just like everyone else.
And it's probably more rewarding over time for you to have people stay longer, but even if they give you a lower fee, basically.
Yeah, that's another thing I think is probably good practice, for fund managers out there, is to, have maybe like every 10 years, you lower fees or something, for the people that stick with you, type of thing. Yeah, you take it down 10% or something. I don't know. So it gives people incentive to stay with you. It's not like you're paying them to stay, but it's like, look, over time, well, I think it will do really well. And I know there's going to be ups and downs in the meantime. So I don't want that to freak you out and have you leave at the wrong time, and then come back to me when I get hot again. So you become like, other investors and other funds that have spectacular track records, but you find out that half the people invested in those funds don't make any money because they're always in and out at the wrong times. So I try to, get a relationship with them and have a fee structure that works, that makes sense for me and for them, so that they don't succumb to those human type of behaviors that ruin performance. So, whatever I think you can do to make that happen, I think is probably good, probably pretty good. Otherwise, you'll be, having to get a new crop of investors with a decent regularity, which I think is so exhausting. I'm not the type of guy for that. Some people probably love that. I don't. So I don't want to do that.
Hmm. And when it comes to the money people give you, do they have like a contract of a certain years to respect, or?
No, no. Well, we have a contract and all that stuff. All those are on record with the CFTC, NFA, and
Okay.
all that stuff. But yeah, no. In regards to like lockups or something, I don't have any of that. It's my contention. It's your money. You can come and go as you please, but it's probably better that you don't come and go with
Yeah.
your emotional swings. But if it's a problem, it's going to be a problem where I have people coming in and out at the different times, which I don't. I'd probably just say, look, man, just move on. Just do something else. This isn't for you. I don't like to deal with the tantrums of other humans. Like a child.
Mhm.
Whenever you're not happy, you're yelling, and whenever you're happy, you're high as a kite. And we're rich, and then we're poor. Type of a swing. I don't like to deal with that. So at some point, I would just say, all right, just get out of here, move on.
Mhm. Yeah, which is something that is kind of maybe harder than it probably in the beginning, but probably gets
Oh
used to
yeah,
it also.
yeah. You know, I think that's another. That's probably a personal preference of mine. Like I said, I'm not in it to maximize my money. And if I was, I'd have to do everything I could to get the money in the door and to keep it in the door. So you get this stuff where you get lockups and you get, redemption fees and early withdrawal fees and all this bullshit where it's very prevalent in this industry,
Yeah,
because I think everyone would, maybe agree with me too that most people are in this business for the money. They're not in it for, to integrate into their lives. It's their entire existence. They're here to maximize the amount of money they can make in the shortest amount of time possible and then go away to a beach or travel or this or that and not have to work for anyone again, not have to deal with any other people again. They manage their own money and all that. And that's fine, but I'm not in it for that.
hmm
You
yeah,
know,
it's kind of a different thing for sure.
yeah.
And I guess it happened before that he had some kind of bad time with your fun, like that things don't go well at all. So how do you deal with those hard times?
Oh boy. Well, whew, my wife is like she helps me through these tough periods because she's not a trader or anything like that. She doesn't care about the finances of our finances or whatever. So she doesn't care. But I won't say talks me off the ledge because I don't really get that deep. I don't get that low. But she definitely is like my, mental health consultant, my mental health doctor, because
hmm
I'm much like a lot of other traders. I'm, very competitive and I want to win all the time. I know deep down that's not going to happen. I know that that's not natural where you're going to win every month or every
hmm
day or every year or whatever. But I'd still like to, and it won't stop me from trying to make my performance more consistent type of thing. But she's like the voice of reason sometimes, and I get very, very jacked up and very, very frustrated or angry, or, beside myself. But, like one thing I do is to, absent you having a person in your life like my wife, maybe it's a parent or a friend or something where you can kind of converse with and air out to and vent to, I think that's pretty good. That's kind of like where the trading tribe idea started from.
hmm
To have this group to work through our issues and stuff like that are hurting our trading. If you want to get angry and frustrated and stuff like that, it's fine. As long as it doesn't impact your decision making, okay. But once it does, I think you need probably, you need some more help. I'm not here to, tell people how to do that, but I did it through the training tribe. So I think I've gotten that down to more of a science where okay, I get frustrated, but I know I stick to my thing and I don't ruin my trading. Other things I've done, I've like I said, I grew up playing baseball and I've coached baseball, over these past 6 years. I've coached like, travel teams, like young kid teams, 10 to 12-year-olds, kind of like get your mind off of trading because, markets, like, what are you going to do? You can't change the markets. If they suck for you right now, they suck. Like, you got to wait it out. You got to just, like, all right, throw your hands up and say, all right, well, this is how it is right now. Nothing that I can really do except for, execute my discipline and just wait for things to turn around. So, but if that's, too much mental anguish for you, where you're just staring at the screens all day and obsessing about it, you're probably going to cave and do something you shouldn't do. But if you get your mind off of it and, go focus on something else that you can do and be productive, like I did with like teaching kids baseball, I think you can probably execute your strategy or, your style of trading probably a little better. Not to say like where you go and forget about your trading. I'm just saying, don't forget about it, but you might, at some point it becomes unhealthy where you just think about it all the time and, you're just stewing in the frustration or the anger, negativity. It'll impact your health and it'll impact your relationships. So, maybe do something else for a bit, for a couple hours a day or, a few hours a week or something like that. Who knows how it comes from that? Like I've coached baseball for a few years now and, not a big time commitment. And, who do I meet? I meet a couple of the dads, here in New York City. They're hedge fund guys. One guy has a $5 billion market neutral fund. This other guy was a co-CIO of Viking Global, which is a $30 billion fund. I met some good people, and like, this is like free networking events type of thing.
Yeah.
Like you don't know how things could come up. So I think like, get out of the house, get out of your head, go interact with other people somehow. And you don't know who you can meet and who they'll help you, with your fund or if you're going to do that one day or, you don't know. So It's a funny thing. I think, that definitely helped me and I would advise other people to give it a try, you never know.
Cool.
Yeah.
Cool. So before we wrap up the interview, I just want to hear a little bit about your trading style these days, because my guess is that you're not going to be trading all day because you wouldn't have time to like promote your services and all that stuff. So, what will be your trading style exactly?
Trading style is very old school, long-term, diversified trend following. My trading doesn't take that long every day to execute. It takes about 30 minutes at the end of the day to update the new prices and run the new data into the model. And then, it tells me to change my stops here and there, change position sizes here and there. Most of the time, it doesn't tell me to do anything. My average holding periods are, 10, 11 months. I'm a very long-term guy. I don't trade. I don't make many trades at all. And, I'm looking at the market universe I'm looking at is all futures markets, all liquid. There's some markets out there that are not liquid that I wish they were. But, looking at looking at all the different futures. So from currencies to commodities, bonds, stocks, all that stuff. I'm purely technical, so I'm purely price-driven trader, no macro, opinions or no fundamental thoughts or data that I'm looking at there. Not looking at any other advanced like technical like indicators. Like the only thing I'm really looking at are moving averages and breakouts, and these are long-term in nature. So I'm not looking at like a daily setup over the past month or something. These are like very long-term things that are not fun to really talk about because there's not much to talk about. There's not much changing there.
Yeah.
So
it's kind of a boring topic overall, I guess.
Yeah, I mean, it's like, stocks. Like it's like buying 52-week highs and selling 52-week lows. Is that fun? That's not fun.
Yeah. Exactly. Yeah.
And that's like pretty much what I'm doing. Okay. So in terms of that, like in terms of like the indicator, like when to get in and when to get out stuff. But yeah, I mean, I think a lot of time when I'm spending on now is kind of like researching into how to get an optimal portfolio mix, because what you see nowadays, I think, for a lot of trend followers is a lot of like the big CTAs out there is that they have a 50 to 100 market portfolio and it's mostly skewed to stocks and bonds and currencies just because there's more of them than there are commodities. So you get this, very financials heavy portfolio. They trade them all the same, and they do really well when financials go up, and commodities, because these firms are so big, they don't really get the benefit of like commodity moves and stuff like that. So I'm trying to rethink that way of because I noticed when I first started, I was trading 11 markets. I had a couple from each sector, and I started to add markets over the years, and now I trade over 50. So it's now you're like, oh, I can't add any more energies. I can't add any more grain markets. And then you just keep adding, if you kept adding more stocks, more bonds, more currencies, just because there's more of them. So it's this seems dumb. I'm going down the same path that these other guys are, and their performance is not that great. And I think it could be done better. So I'm working on some things where you can get exposure you have more concentrated exposure and not really lose anything in terms of diversification. Because a lot of these markets are, you get overlap, outside of the first 20 to 30 markets that you'd have, you don't really get much added benefit. Oh, I trade the 5-year treasury. Oh, I also trade the 10 and the 30-year and the 2-year. Well, you look at all the correlation analysis you want, they're all going to be around 99% correlated. So it doesn't really it doesn't make sense to trade all of them, unless you're a big firm that you need to spread it around. But for smaller guys, it may make more sense to just trade the strongest one. And right now, for example, what's stronger on the downtrends? It's the shorter term treasuries, just because the shorter end of the curve, with the Fed, hiking, they're weaker. So, why trade the longer end right now? Yeah, sure, it's going down if according to me, but the shorter term stuff is doing much, much better on the downside. So, so I'm trying to think of, okay, don't trade them all, trade the strongest one in each group or something like that. That's just something I'm working on now, how to implement stuff like that, or maybe create a whole separate strategy for that. But yeah, I think smaller guys need to use that to their advantage, where they can, maybe size up a little better, a little bit more in these stronger names.
That really shows how big research is for you. You're not just trading and trying to make money. You're doing a lot of research, which is going to pay a lot in the future, I guess.
Yeah. This isn't for what's the hot market right now, and let's make a huge bet on it and make and try to replicate that all the time, which I think a lot of people are trying to do. They're almost trying to implement a lottery type of payout, where they be very, very tactical with their picks, however they get to their picks, whether it be stocks or futures markets or forex, whatever. And then make a big bet and then get paid and then leave, and have no real pain, not sit with the thing and watch it go up and down against you for a long period of time like I do. I think the other way, the high concentrated, tactical way, is probably more fun for more people. Having more positions with smaller bets and riding the long-term trend of all those markets is it's not as fun,
Absolutely.
because you're almost guaranteed, where if you have one big trend and you have your little bet on, it's not going to change your life. I think the other way, the more concentrated way, is probably more fun for people, because they think, I can get rich much quicker.
Sure.
Which I guess is true, but you get poorer much quicker too. So
Exactly.
And no one believes that they're gonna not win. So they think, this isn't gonna happen. That's not gonna happen to me. Just like life tragedies, that won't happen to me. But it does to a lot of people. So this approach works well for me. It hasn't been the best of strategies over the past 5-6 years here, but hasn't been a whole lot of trends out there. But outside of stocks, I should say, stocks are just relentless. But outside of that, not that great. But these are just things that every strategy goes through. So no matter what you're doing, expect to lose sometimes, and expect to lose for possibly long periods of time. a year or two or something where it's just like nothing to really show for it. I don't know that hard work or a good back tested system or something necessarily guarantees how well you do in the future. It might be as good of an indicator as any, but doesn't necessarily guarantee it. So just be ready for something new to happen. Yeah.
So how can people find you if they want to reach out to connect with you and see what you're doing?
Well, I have a couple websites. One is the blog site, which is michaelmelissinos.com. The other one is melissinostrading.com. And I'm all over, I'm on Twitter. I'm on, someone wants to connect me on LinkedIn or something. I have, and I have the podcast too, which is on iTunes. It's the Trend Trading podcast with Michael Melissinos. So, yeah, that's pretty much where I'm at. And you can always hit me up on email. If you go to my site, my emails are all on there. If you want to hit me up on email too. Yeah, all over.
Cool. And what kind of goal do you have for the future, Michael?
What do I have going for the future?
What kind of goal do you have for the future?
Goals. I think just to be alive, to be thriving, to be surviving, to be a go-to guy, for like in terms of investors, like to be a go-to guy in the trend following space, guy that people, respect, trust, and like to work with. And, when they work with me, they know they're getting it straight. They're getting the truth. And yeah, to be thought of as that. I don't have any money goals. I don't have any performance goals. To be profitable every year. Sure. Great. That's what I'd love. But I know that's not always going to happen. So can't really be a goal if I can't really control it. A big part of the equation, which is the markets. So no, just to keep, communicating well to people, to be clear, to be, just to lead by example, I think.
I like that. And Michael, we have a question you ask, I guess, at the end of every podcast. So if you could give only one piece of advice for traders in one sentence, what would that one sentence of advice be?
I think to know yourself before you start. I think most people don't really, they think they start trading and they don't really know what they want out of it. So underneath, they're going on their emotional coasters, driving their trading. I think, like for me, when I started, like I've said many times, the goal was survival. The goal, obviously, to profit, but to maximize survival. Like nothing is going to kill me. You can throw anything at me, nothing will kill me. And I think I'm okay with the path that I'm setting out on to know that that's the end goal. For other people, I don't think they know what their end goal is. I think for most people, they think they just want to like hit the lottery, make a lot of money. And I don't think they do the work to know what kind of path they're setting out on that they may have to live through in order to get to that end goal. And they may have to realize that they may have to die a couple times before they hit the big riches. And I don't know that people are okay with that. I think they don't want to believe it, so they don't deal with it. And they just say, I want to be like this guy who has a ton of money. And, okay, well, how are you going to get there? Well, I don't know. And they just start doing things. And I think they're not ready for the market roller coaster that they're going to embark on. So I feel like get a very clear idea about what you want, what your goal is, and then do all the work you need to do to understand the things you're going to have to live through in order to get it, the good and the bad.
Love that. So
yeah.
Michael, thanks so much for being on the podcast. We'll keep in touch. It's been a pleasure to have you here.
Yeah, it's great. Great talking. Thanks for having me. I will talk to you soon, my friend.
So that was it for the interview with Michael Melissinos. I hope you guys liked it. I hope you got some value. And make sure you write down a lesson you get from every episode you listen to. That's a sure way to move forward. And I understand the point that people want to get inspiration from podcasts and try to get back on the right track. It helped me a lot, myself. But ideally, you want to write down a lesson for every episode you listen to. And that allows you to focus on things you want to implement and focus on things that you can do to improve. And then you track yourself to see if you really do those things and if you execute on what you listen to. So I'll be back next week for the 99th episode of the podcast. Super thrilled about that. Looking forward to it. If you guys have any question, any feedback, just email me, send me a message on Facebook or whatever. Make sure to check out the Facebook group over at desireToTrade.com/group. And I'll see you guys pretty soon. Oh, and if you guys are in the Bangkok area, let me know as well. Actually, right now I'm probably going to be in Koh Samui. But if you guys are in Bangkok, I'll be back there pretty soon. All right, ciao.
Thanks for listening to the Desire to Trade podcast. To get all the information on this show, free articles, and unique resources, make sure to check out www.desiretotrade.com and subscribe. Please leave us a review and let us know what you thought about the show. It's time to become the best trader you can be. See you next time.